The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome to The Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master. Now, I am here to inspire you, and more importantly, folks, here to help you lay the groundwork so that you can lead an inspired life, because to me, that's what it's really all about. It's all about really sharpening your skills, folks, and thanks so much for listening to us on the radio. If you are, you can always catch an archive of this show on Channel 9. If you're watching live, you can watch us on TigerTV. You'll be able to see my stock charts out here. You know, I'm absolutely going to teach you something. We're going to take a look at Fibonacci expansion numbers. We're going to take a look at retracement numbers. We're going to take a look at A to B equals CD, anything that you want. You can always call us, folks, 877-927-6648. Hopefully you had a fantastic weekend. It is Marvelous Monday. Now, not so marvelous, perhaps, in the markets here. You got the Dow futures off about 90 points or so. ES Mini trading out at 13.1550. That's down about 0.8%. NASDAQ futures off about 0.6%, trading down 15 points out at 25.58. The Russell 2000 off 10 points out at 7.59. Again, our call number 877-927-6648. Now, here in Tampa, or I should say along Florida, really the entire state of Florida, but certainly Tampa got hammered. It wasn't one of Steve's hammers. This was Debbie Downer's hammer out here this weekend. Tropical storm Debbie absolutely throwing wind, tornadoes and spouts and water spouts all over the place. You had a lot of flooding going on, and it was absolutely Debbie Downer weekend. Hopefully Debbie is on her way out of here. Of course, Debbie would be doing some damage someplace else, either along the western side of the Gulf Coast, or perhaps, headed further west. So don't know where Debbie is headed. I just know where Debbie has been, and it has not been a pretty sight out there. Of course, you didn't tune in to get the weather report, but everybody is good. We just still have some high winds out there. And you talk about high winds, folks. Now, I happen to be just checking the homepage at TFNN.com as I was logging into things this morning. I noticed, I think our programmer may be out sick today because we had that Tiger Dollar promotion that was supposed to end at midnight last night, and I see it is still up on the screen out there. So if you were one of those folks that maybe you were on the fence and you needed something to put you over the fence, maybe it was Debbie Downer out here, and so go ahead, put yourself over that fence, go sign up for our Tiger promotion, because still up on the screen, you can still get it. And that's a promotion, folks, where you're going to be able to get 10 plus hours worth of education, as well as more dollars on your dollar. So if you do subscribe to any services, or you are considering subscribing to one of our services, please go to the homepage at TFNN.com and sign up now, because it's going to be coming off of that page most certainly. And folks, what it's really all about, we'll go take a look at these markets here. We'll take a look at these different expansions, and we take a look at the education. So beginning the week after July 4th, so July 11th, then July 18th and the 25th, and so each Wednesday thereafter, each host, and to kick things off, I believe we've got Larry Pesavento is going to kick things off on July 11th. Each host is going to give a 90-minute workshop. And these are books are so important. I've got a great library of books. Hopefully you do as well. And in today's technology with iPads, iPhones, and education books, it's video education, it's live education, it's take a look at current charts. And so you're going to have all that opportunity, whether it's learning patterns out there, whether it's learning how to do some money management strategies, whether it's learning parts of the Chapman wave, whether it's moving averages, a whole slew of education out there that, that 10 hours, folks, is worth like 10,000 hours worth of your own self-education. And really sharpening your interest in two subjects, folks, is about life and people, and that's really what goes on inside these markets all the time. We take a look at life and people. Right now on my screen, if you're following us, we're looking at a 120-minute ES mini chart out here. Now, what you're going to see here, that I have the tool that is turned on. Hopefully you're watching us on Tiger TV, and the tool that I have turned on here shows expansions and contractions between swing points. This is the Fibonacci summation numbers that we use here. When there's really 5 numbers that I would like you to focus on. It's 0.382, it's 0.618, and it is 0.786. Those are your contraction numbers. Those help you to also understand the energy in perhaps the next leg of the move. You also have some expansion numbers, 1.272 and 1.618. So I want you to be able to understand that when you're taking a look at supply, demand, when you're taking a look at fear and greed, it really happens at these swing points. You see, because what happens is that you see major turns. You see major, as I like to refer to them, as major intersections in the marketplace. If we go take a look at the 120-minute chart out here, what you'll see after this cascading waterfall, and when I talk about cascading waterfall, that was when the futures were opening up at 9:30 in the morning on, I believe it was last Thursday, June 21st, and you had the ES Mini trading up at the 1353 area, and then boom, you had this water. It was like going to Niagara Falls in the ES Mini. And what the ES Mini did, traded down, continued to trade down all the way into the 415 time frame on the 21st, got down to a low of 1317.50. Closed out the session 1318 and a quarter. Now, what you actually had there is you had a 1.272 expansion of swing points. And so if you take a look at any of the swing points that are out here, you're seeing a 1.272 expansion. You see that, folks, and when you see that number show up, if you were monitoring swing points, if you're monitoring expansions of swing points, what you would realize when you get to those areas, whether it's 1.272, that's what you had happen down here, and then you had a little turn in the marketplace. In fact, if you come back up to the last time that the market was moving down and you got to an expansion point, you got to the 1.618 expansion, that was coming off of the low that was put in at about 9:30 in the evening on the 19th, all the way as it traded up to the high at 1:30 in the afternoon on June the 20th. So you have this 1.618 expansion. What's the market do? It turns. So right now, what you should need to know is that if you're asking, hey, where's the market at? Right now, the market is at an area of support. And when this area does, now, when you take a look at it being as a support, it's a support of an expansion area. It's a support of the expansion off of that low of that cascading waterfall. If this area holds, you should be saying, Steve, where is it going to trade to next? I am glad you asked me that question. Well, if the 1.272 doesn't hold, it'll move to 1.618. That'll take you down into that 1389-ish area. That's where you'd be looking. Now, we're looking at the 120-minute chart. I suspect that the market wants to head down there. But right now, as we speak, it is up against a support level. So you know you've got the line drawn in the sand here, at least it's drawn in the sand on the ES Mini 120-minute chart. Now, what you really want to be paying attention to is this. You see, this here is this 0.382. That has been all that the market has been able to retrace thus far in taking a look at the ES Mini 120-minute chart. With only a 0.382 retracement, folks, what that says is there's still lots of energies, just like Debbie Downer, just like the storm that we have that's out here in the Gulf. It's in the hot waters. It's picking up some steam, and it's possible that the ES Mini is doing the same thing, just churning and churning. And if you don't know what the power of a 0.382 retracement is, just take that rubber band. I got to get that rubber band in this room here. Take that rubber band, wrap it around your finger as tight as you possibly can, back it off only about 3/8 of that, 38% of that, and let that thing go. And when you let that thing go, folks, it's got a lot of energy. And so that 0.382 retracement is so helpful to understand the type of energy that is still in there. So here, when you take a look at the market trading out in the 1315 area, you go up against a 1.272 expansion of a major, when I say major swing point, major intersection, because of the downdraft that we had. You're trading below those lows. From a bearish standpoint, that's what you want to see. You want to see the market stay below 1317.50. It stays below there, that certainly is going to set up your 1290-ish area. From a bullish standpoint, you want to see the ES Mini get up above 1317.50 post haste, as we say. Now, let's take a look at the daily chart. So let's take a look at, we're at the 120-minute. Normally I start off with maybe a 10 or a 30-minute chart out there. I thought it was most important now to show you this area. You also do have at this 1.272, you've also got a 0.786 retracement off of the swing point that is down on June 14th. Now, June 14th, why is that important? Well, Actually, it was June 4th. I was thinking it was June 14th. So June 14th, the swing point low at 11:30 that came in at 13:07.25. You see, I asked you, why is that important? I couldn't come up with a reason why it was important. So it was June 4th that I was thinking about. June 4th happened. And we'll take a look at June 4th. In fact, let's go do that now. Let's go take a look at the daily futures charts out here. Let's take a look at the larger picture because we can always drill down. Let's take a look at the daily chart and take a look at what we're at. So when we're looking at the daily chart's not going to show you that 1.272 expansion of swing points. That's why it's important when you are, no matter what it is that you're trading, you want to be able to take a look at different time frame charts because it'll help to be able to paint a better picture. You want to understand what's really going on underneath the covers. If you're just taking a look at the daily chart is telling you really two things. Number one, you are trading underneath the downdraft from June 21st. That's not a good sign. If you're a bull, it's a great sign if you are a bear. You're trading below that area, and that, again, 17.50. Why? What does that set up? Well, if you go back to June 4th, that's what I was really thinking in my mind. June 4th, you take a look at the low. That was that full moon that we had out there. Beautiful full moon coming in at a low of 12.62 before you made a major intersection change for the markets to move higher, folks. What that sets up? The point 618, sweet 618. Just like if you were going to visit us here at TFNN.com, that sets up that 1289 area, folks. Just like we saw that 1.618 expansion. Same area, 877-927-6648. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of tfnn.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at tfnn.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Dow off about 93, S&P's off 11, and it is Marvelous Monday, and on Marvelous Monday, it's a great lineup around here. The Money Master show following this. Then we go up to Basil Chapman up in Newton, Mass. from 11 to 12. Larry Pesavento from 12 to 1. Back here for the David White Show from David White Show. Yes, it is the David White Show, the warm-up band for the Tom O'Brien Show today. And if we take a quick spin around the world here, you've got the DAX trading off 104 points right now. That's down 1 7/10%. You get the FTSE off 0.7%, down 42 points out at 54.71. You got the Nikkei off 60. Well, they closed down 0.7%, down 63 points last night. Hang Seng closing down about 0.5% at 97 points, down 97 points out at 18,897. And the Shanghai was down 1 6/10%, down 37 points. You have King Dollar up 24 ticks right now. King Dollar not letting up at all. Why? Because you got the euro that is letting off of its gas pedal for sure. You got gold trading up $6 out at 15.73. Silver, we're certainly going to take a look at Hi-Ho Silver. That's up 9 pennies right now out at 26.75. Why silver? It's up against a real important support area. You've got light sweet crude down 76 cents, trading out at $79 on its way to 74. And if we take a look at some of the movers and shakers in the marketplace here right now before the market opens, shaking up the market to the downside, you've got Shire PLC, ticker symbol on this, folks, SHPGY, closed out at 91.36 on Friday, trading out right now at $80.21. Get it a little hammered. Some type of U.S. Food and Drug Administration response to some type of petition on a Andorol XR. No, Adderall. I think Adderall. But they are just simply getting the kibosh. They're getting a little Debbie Downer this morning. You also got Ventress Bioscience, VTUS. They closed out at 12.26. They got cut in half, folks. You know, I talk about, we'll certainly see that thing drop, and we'll take a look at that. VTUS is the ticker symbol. We'll go see if it's trading down to an area where it last had some volume. So getting cut in half this morning. That ticker symbol again, VTUS. You got Momenta Pharmaceutical. They're having momentum in the wrong direction. They closed out at 17.01. The last trade just fired off at 13.22 out there. So they're taking it on the chinny chin chin. BHP Billiton closed at 63.31. Trading down right now at 61.81. Bristol Myers Squibb. I don't know if they still are part of the Squibb, but BMY. They closed out at 35.36. They're trading out at 33.80 right now. Let's see. Chesapeake Energy, they closed at 18.61. Not a big deal. Trading down at 17.56 right now. Petro Brazil, PBR, let's see, down 18.86. What they're also 18.66. They closed out at 19.60, so they're off about $1 this morning. If you take a look at anything popping to the upside, you had Teva Pharmaceuticals closed at 38.01. They're trading out at 14.40, 69, 40.70 out there. Let's see what else. Quest Software Not a huge jump from where they were at. They got a better takeout offer. They closed at 26.22. They're trading out at 27.74 right now. You've got, what else? Research and Motion having a little bit of movement. They closed at 9.86. They're at 9.92. Not a big deal. And Zynga Software, let's see. They closed out at 6. Nothing out there to pay attention to. We should pay attention, though, is the ES Mini. Now, what I do have up on the screen here, folks, is the daily chart. And on the daily chart, just simply showing this trend line here off the bottom. So we're going to take a look at a little bit of divergence out here. Clearly, when you take a look at the trend as the ES Mini S&P futures was trying to move up and get into the 1385 area. It did get up to the 0.618. It's possible that is all that she's going to do right now. You know, what you're seeing is a trade below the 0.382 retracement of this last leg up. That brings in play that 1289 as we took a look at it earlier in the first segment of the show. But let's go take a look at the Dow futures out here. Let's see what the Dow futures are doing. We'll take a look at the Russell futures. Again, same real trend line coming off of the June 4th low. So that June 4th low, that touch point being 11,985. Next touch point being where the had nice movement in the Dow futures, June 6th. Low on that was 12,051. What you can see here is this has really been the last line in the sand of this morning here. You can see this trend line. Right now, the Dow futures trading just below that area. Look to this chart to give you the big signal of the day, folks. 877-927-6648. We get back, we'll go see how this market is going to drop. Dow futures off 105, ES Mini down 12. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter, you get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. You got the Dow off 120 points. S&P's off 15. Composite off 36. Small caps down 12. New York Stock Exchange down 1 3/10% off 100 points. NDX off 29 points. That's down 1% as well. King Dollar up 25 ticks. And silver, hi-ho silver. Let's go take a look at silver, see what we've got on the silver chart out there. This is one that you're going to absolutely want to be paying attention to. Why? Because what I've got up on the screen, folks, here is the weekly chart of silver. You know, I've shown you the gold weekly chart out here, and I'll go ahead and switch over to the gold chart as well. What you're taking a look at here on the weekly chart of silvers, you are looking at its long-term uptrend line. That goes all the way back into October of 2008. So if you are at home, you've got the silver continuous contract up on your screen. That's when silver was trading as low as $8.40, folks. So it goes all the way back to October 2008. What you can see is this trend line has held several times. The last time that silver came down to test that trend line, and when it made its next touch point after that 2008 area, was down in February 2010 when you had silver trading pulling back to the 14.95-ish range. It then tested that trend line again before silver took off. That was the August 27th time frame. QE2, also 2 P index dates, a back-to-back P index date. You know, how do those back-to-back index dates know that that's when QE2 was going to be coming on board? That low there being $17.73. Of course, on the route up here, you had the bearish of bearish engulfings. This one here, when you take a look at the weekly chart, folks, this one taking out, the highs were put in, by the way, April 29th, so the end of April 2011. And on a weekly basis, this thing took back the entire month beyond. You know, you're talking about one big, huge bearish engulfing. That gave you the signal that silver wanted to trade lower. It finally, last week on Friday, came right into the trend line. Last week it closed out at 26.82. Right now, I'll blow this up a bit here. You can see, pull it up on the screen, maybe even make it easier. You can see here that you've got silver trading below this area. Now, this is a weekly chart, so you have to wait till the week is out to see where it is that silver trades to. But if you do break below this area here, what it does, folks, is it sets up, if you just simply come all the way back to that 2008 time frame, take a look at the retracements off of that low. Again, we're coming from $8 and change all the way up to the high that was put in, most recent high, I would say, April of 2011, when you had, did I say gold? Silver up at $49.82. What you'll see is first the 0.618 area. That 0.618 area, that would be a major area of support, $24.22. But you break this type of trend line out here, folks, it more likely sets up the 0.786 retracement. Silver would then pull back into the $17 and change rate. How could it do that? One would say, well, it's really all about this little guy out here, the king. King Dollar no longer in Memphis, Tennessee. King here is the U.S. dollar index trading out right now at 82.74. And what it's going to try to do, if we just take a look, we're going to get rid of this little downtrend channel that it was trading in. Thursday, it certainly broke out of that. We're going to go ahead and get rid of that. No longer needed. And we'll take a look at the retracement that we have now. What you can see, it is coming into the swing point of June 1st. Low on that is 82.70, trading at 82.74. So today, if it closes inside 82.70, it'll likely go test the high. And the high out there, folks, would be 83.67. Now, if we just take a look at a simple retracement off of the high down to the low that was put in on Wednesday last week, Tuesday last week, down at the 81.39 level, you'll see that it has gotten up to that 0.618 area. So it just shows you, I'll go ahead and blow this up a little bit more. Maybe it'll be easier for you to see on the screen. In fact, let me get rid of a few of the lines out here. Let's get rid of this one, and it'll make it easier. Let's go ahead and take this, and let's make it dark black. Okay, now you'll be able to see it a little bit easier. So all that I'm doing, folks, is I'm coming from the swing point high on the U.S. dollar index that was put in June 1st. That was up at 83.67, all the way down to the low that was put in on June 19th as it traded down to 81.39. Just simply taking your retracement ruler, going from the high down to the low, you can see that the 0.618 area, 82, looks like about 82.80 is the exact number. You had the King dollar get to 82.82, not too shabby. So this area here, it's testing the 0.618 retracement. That's a normal area. What you have to be concerned about is this wide-ranging bar right here. See how this thing came off the retracement and just sliced through that 0.382 like some sweet Kerrygold butter? What that really sets up is that King dollar wants to trade higher. So the first signal that you're going to get, and when I say higher, at least to the 0.786 area, that would be 83.18. And then as long as it's inside that swing point, I say it does a 100% move, and will move all the way up into the June 1st highs out at 83.67. Of course, if that happens, you'll see continued pressure on the markets out here. Right now, you got the Dow trading down 140. So the area, that one of the lines that you're going to want to be watching, King dollar, if it closes inside 82.70, then that is going to set up a move higher, and that'll set up a move lower in the markets here. Of course, if we take a look at currency pairs out there, the euro, U.S. dollar currency pair trading out right now 124.84, and let's go ahead and pull this up on the chart here. Let's get rid of some of the patterns that we have out here. So the euro, if we take a look at the pullback on side, the euro coming down also from the June 1st area. So this is going to show really a similar pattern to what we were taking a look at on King dollar. But this here is something that you can trade. And right now you can see how this also came into that 0.618 area. That was at about, the low so far this morning, 1.24701. That's close enough to that 0.618 retracement area. That would set up a move. Now, what you can also see is take a look at the swing point out here, June 1st swing point, the high there being 1.2574. Didn't get all the way down there, but you can see how these things are running, parallel with each other. Let's go take a look, as long as we're in the currency marketplace, let's go take a look at the Japanese yen U.S. dollar currency pair. Let's see how that is trading this morning. That's trading out at 79.62. That is after completing on the intraday charts. This is a daily chart that we are looking at here, completing an A to B equals CD pattern out there. Now, if we do take a look at the pullback here on the Japanese yen, I'm going to do a couple of things. One, I'm going to draw the just a simple trend line off of the lows from June 1st on the yen right up here into the low established on June 15th. So you can see this is the trend line. This is where I would expect the yen to pull back into. If you take a look at the retracement off of the low from June 1st into the high that was put in this morning as it was completing its intraday patterns out there. Let's see here. Pull that tool up. What you would see is right now it's working its way down to that 0.382 area, which would be the 79.49-ish range. Looks like it wants to trade just a tad lower. That is on the Japanese yen. If we take a look at the light sweet crude, right now you can see light sweet crude trading out at 78.57, doing more than a 1 to 2.618. A to B equals CD. Had a little bit of a bounce here on Friday. When you consider that the hurricane, it's not a hurricane, it is a Tropical storm Debbie out there in the Gulf, creating problem with some of the platforms out there, I am sure. And you don't have light sweet crude trading up. What's that say? It says light sweet crude does want to come down here and test the 74.95 level. You are not inside that swing point. That's the. I'm going to go ahead and get rid of the retracements out here. Let's go take a look at the swing point that it is testing. That's the swing point from October 4th. So it's trading. You got oil now trading into the October 4th area. Actually, it is trading into that swing point. Let's see here. So the top of that swing point happens to be 78.40. You're at, wait a minute, 78. Yeah, okay, 78.40. So you're not trading inside that swing point just yet. 78.40, a key price to be paying attention to on light sweet crude. Let's just switch over to the ETF charts here. We'll take a look at the 5-minute charts. It is, we're 10 minutes. We're 3 bars into that session right now. Let's just take a look at volume, see if there's anything substantial in here. You can see price moving down. You can also see volume dropping off just a bit. Of course, these are just 5-minute charts here, but you're not seeing volume increase on the way down. And the next bar here finishes in 2 minutes. So not anything major here so far on this pullback. If we take a look at what is popping, what is dropping, again, Shire PLC and Vitus, VTUS. Vitus, the one that's down 56% right now. So let's go ahead and take a look at what's popping and what is dropping out there, see what it is trading into. So let's start with Vitus, VTUS, Ventrus. My apologies, Ventrus. VTUS, though, is the ticker symbol. And gapping down, trading out at 540 this morning with volume, big volume. That's after doing some pretty decent volume on Friday on the pop-up. In fact, it made a high. Make a high now. It was testing the high, so let's take a look at this. Okay, so you have this ticker symbol, VTUS, Ventrus. May 14th, pops up with 2 million shares, gaps up, does, as I say, 2 million shares. You come in. Now, the low on that swing point high, 12.25. You actually close out at 12.26 on Friday, coming into it with 2.2 million shares. Now, today, all that air is coming out of the balloon. We've been trading for 15 minutes, or maybe just shy of it, and it has done 1.4 million shares. So let's go see where this thing, oh my goodness, this thing is a IPO and is now trading below. Talk about taking everybody's lunch. So nobody in the stock is in a profit position other than a few traders who purchased when it got down to 528. It's at 544 right now. Do not bite on this thing. Ah, wow, look at that. So don't need to put this thing on a weekly. Nobody having fun with this stock right here. And just don't get in the way of this thing. At least that is my opinion. That is on Ventrus Biosciences out there. Let's go take a look at Shire PLC. That's off 11% as well. SHPG is the ticker symbol there. SHPG. And let's go see what that is doing, I guess. SHPGY. Okay, that's why I didn't pull up here. SHPGY. That would be helpful to put in the proper ticker symbol. Trading out right now at 81.19 with volume to the downside. So this thing has given you a couple signals to the downside we can see with volume. The first gaps down, this thing's got, how about this? So let's take a look at this stock here. Look at all the gaps on this thing. Where is this out of? See if this is also some currency related stuff here. Yeah, it's going to take me a second here to put that up. SHPGY. And these folks are out of, okay, company profile. Don't know why it doesn't show where these guys are out of. Anyways, let's go take a look at the stock chart out here. And we take a look at the stock chart. It does have this island reversal pattern. It does this, folks, back in February 2012. Of course, this thing has got so many little gaps in it that really may not be a very reliable pattern on this chart because it's probably somewhat currency related. And maybe it's not. I could be wrong on that. So let's take a look at what it is telling us volume-wise. First thing, it gaps down with volume March 30th, does 3 million shares. Now today, just to give you an idea what it has done here, gaps down. You've done 800,000 shares in the first 17 minutes of trading. And it's set up an A to B equals CD down. Looks to me like it completed that. So maybe it is making a new one. That A point being up at the top of that island out at the 108.79 area. That was the A point. The B point was down at April 11th, down at 92.33. Makes a slight retracement, nothing major. It looks like a 0.382 retracement, suggesting more than a 1-to-1 A to B equals CD. Of course, it completes the 1-to-1, makes a retracement of the C to D leg. Let's go see what kind of retracement it does. 0.618, sweet 618. It's why you want to make sure that you're paying attention to these Fibonacci expansion and contraction numbers. So this thing here now taking out another swing point. The swing point it's taking out is June 1st. The low is 82.11 or 81.59. That swing point only had 360,000 shares. Today so far, 829,000 shares. They are trying to push this higher. Let's put this on a weekly chart. Let's take a look at the longer-term chart, see what we see. So on a weekly chart, taking out the B point, that had 1.5 million shares. That is on June 1st, the week of. So we know that so far you've done 829,000 shares. Taking out that B point is not going to be a problem. And when you do take a look at the last place this thing has volume, where it would likely head to, this will be pain if you are in the pump on this one. That would be out at 55.53. You're at 81.40 right now. So I can't find any reasons here. This thing gave you a signal that the move to the upside was over. It did that in August of 2011 when it made one heck of a bearish engulfing candle. Took out 4 weeks. Took out an entire month in 1 week, folks. That gave you the signal that the move on SHPGY Shire PLC was over with. 877-927-6648. Dow off 143. S&P's off 17. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Got the Dow off 150 right now. S&P's off 19. And if we take a look at what's going on inside the Dow here, you've got 29 of the 30 Dow stocks in the red. The only one popping to the upside is Walmart. So let's go take a look at Walmart and see what she is doing out there. WMT is the ticker symbol. Now we know Walmart is trying to attack its highs out there, trading out right now at 67.64. I'm going to go ahead and put this chart on a monthly. So let's put this on the long-term chart out here. And when we take a look at Walmart, what Walmart is trying to do is attack the highs that go all the way back to 1999. That's going to be a pretty telling signal. This thing really being in a really long-term consolidation. You figure the high of 1999, folks, is 70 1/4. You trade out at 67.64. So far in the month of June, you've gotten up to a high of 68.66 out there. And low during that time period traded down really to a low of October 2000, gets down to $41. So you got a 41 to say $70. You got a $30 consolidation area that this is in. Long-term wise, this is in a long-term bullish mode. It gave you that signal coming back into the October 2011 timeframe. If you want to understand what those signals are about, or maybe how it applies to any of the mutual funds that you own, or you have your 401ks, your retirement funds in, and you haven't gotten my free report, you'd be one of the few that haven't gotten that free report. Go to the homepage of TFN.com. You can sign up for that. It says free report out there, and that'll be downloaded to you very quickly. As long as you're there, sign up for the Great Panther Silver giveaway. We'll be giving away another ounce today as well. And absolutely, folks, take a look at the Tiger Dollar promotion. It was up there this morning. I don't know if that has been taken down, but as long as it is up there, you can still sign up for our Tiger Dollar promotion, which is a great way to for you to get your additional education, as well as make some money on your money for your services here at TFN.com. If we also take a look at the IBD 50, take a look at what's dropping and popping there. So of the IBD 50, only one stock in the green, Watson Pharmaceuticals, is out there. WPI is a ticker symbol. Let's go take a look at that. That is up $1.97. Otherwise, you've got 49 of the 50 on the way down. So it actually gaps up this morning. Watson Pharmaceutical. I don't see any news on it out here. There we go. No news that is pushing this higher, certainly gapping higher. So let's go take a look at what the stock chart is telling us. This thing does gap up. So this thing came back to a breakout area. It broke out. It's got several of them, but its most recent breakout area was April 25th. The low of 68.64, 3.3 million shares. Following day, gaps up with 10 million shares. So when it comes back into that time frame, does that around the middle of June, June 13th, 2.2 million shares, going against the breakout day. How about this? So this is really what it is you want to see when you're buying a breakout, folks, is because the day that I'm taking a look at is April 25th. That has 3.3 million shares. Really what you try to benchmark it on, and Tom's going to be doing an entire workshop, as part of our Tiger Dollar promotion on benchmarking volume. One of the benchmarks you'd be looking at from a breakout is this thing broke out with that 10 million shares. So as it's coming back, and it comes back with less than half of that, half of that volume, meaning the 10 million, that's a pretty good signal. Well, when you can actually come into the actual breakout candle, that would be April 26th. That had 3.3 million shares. And you can come in there with lighter volume, as this did. First time was June 4th, 1.5 million shares. That, folks, is a beautiful thing. That's why Watson Pharmaceuticals is popping up. Thanks for being here, folks. Have a great Monday at 9 o'clock sharp. Well, 9:06 exactly. Thanks, folks.